Hey guys, welcome back. In today's video, we are talking about Citadel paying back, shorts panicking and liquidating, and many more in this video. First, we take a look at this from big uns. Guess you forgot Citadel needed a loan to pay people back not even 2 weeks ago. I guess you forgot they've taken a loan or sold off their business the last 3 years. I guess you forgot their credit rating is just above junk now. Meanwhile, AMC and the box office will crush it and break US records. So this is still kind of going back to what we've been talking in the previous video, but addressing more factors as well. Is understanding when people compare the situation of AMC and short sellers, you have to understand is that we are in a way better position. A lot of people are obviously talking about how Adam Aaron is not operating AMC well, that AMC is, blah, 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 all of these factors that they're mentioning. But when you take a look at the short sellers, the people who are, shorting AMC, they are not in a good position. And the examples we always obviously give are, of course, firstly, is what we've seen recently with Citadel, the fact that they needed to take a loan to pay people back. The fact that their credit rating is just above junk. You have to understand that this is what's happening right now. People are rating their bonds at obviously a very, very bad rate. But not only that, when we take a look at some of the other ones like Virtue, who have seen their loans and debts go up, so their borrowing has increased, but they've actually seen their revenue and profitability actually going down. And so what we can see right now is in terms of when you just look at the fundamentals, AMC are going up in revenue, in profitability, and they're going down in debt. But then when you take a look at Virtue, when you take a look at Citadel, what you'll see is actually their debt going up, and then their financials, at least for the Virtue side, their revenue is obviously going down. And so this is when you make a comparison between the two, AMC is just on paper, fundamentally doing better than the short sellers. You can say, whatever you want about all of the things that have been happening, but when you just take a look and compare the two, AMC is better off. And this isn't even to mention all of the short sellers that are already out of the game because they're bankrupt with their positions. We talk about kohrs, we talk about Credit Suisse, we talk about, a high number, we talk about all of these other companies that have shorted AMC and now not even able to compare with AMC because they've gone bankrupt. And so one side is people saying AMC will be bankrupt. On the other side is short sellers who are bankrupt. So when you take a look at the two, you obviously understand which one is better. And when you take a look at some of the other factors involved, I want to just let everyone really clarify and have an understanding, of what's going on. And you can see here, for the first time, this is how bad things are. There is no market since most trades are routed offline. No best order execution, no price discovery. There's a reason this is happening. Market makers and the funds can manipulate and front run the orders. So this is what we talked about in terms of, for the first time, majority of trading US stock is consistently occurring outside the country's exchanges. What that means is that it's rooted into the dark pool. So what you will see is that despite people buying AMC, despite people who are willing to be paying for AMC shares at a way higher price than 342, but they don't have that opportunity. We don't see AMC reflecting its true value because whilst AMC is getting a ton of buy volume, it's rooted into the dark pool, and so therefore it's not hitting the market. Now, if they were truly wanting to show price discovery, if the short sellers, like we mentioned earlier, weren't afraid of the price of AMC going up, why are they doing this? If you're not shorting AMC, it wouldn't affect you with the price of AMC going up. I'm sure everyone understands that. And if anything, if what you're showing on paper is that you've covered your AMC short, you're actually longer on AMC, then actually you would make more money, or in fact, the only way for you to make money would be for AMC to go up. But the truth is, obviously with these short sellers, they bought some AMC because they need to hedge their positions. But the main things are that they're still extremely over leveraged and trapped in the AMC short positions, in which they're not actually showing on paper. They're not actually reporting these short positions. And that's why we're seeing, still, despite the fact they've said that they've covered AMC, we're still seeing AMC getting suppressed. Another thing you can see, Anton Fund failed to disclose to the SEC who they were paying to spread FUD and bullshit all over social media and other platforms. So what you will see is actually an article talking about how short sellers worked with other people to issue bearish reports on company whose shares Anton had shorted. And so this is something that we see all the time. And so you have to understand that this is an actual tactic used by people. There are institutions out there who are willing to obviously sell, to short a share, and then they will release bearish reports, whether or not they believe it's actually bearish, but they will release these reports to obviously benefit for themselves. And one thing that we've realized with AMC and GME all over the years is that despite everything they've done, that they've achieved, despite all the good news, all you will ever see are bad news of AMC and GME. Now, when you take a look in terms of, we have to obviously be absolutely truthful with ourselves. We can't be having a very extremely biased view. But when you take a look at what's happening with AMC, when AMC is paying off its debt, it's restructuring its debt, people are not talking about how that's good for the company. But instead, people were saying, whilst they've restructured their debt, they still have debt. But you can understand that's not a very good ground to stand on to talk about bearish about reports, yet we still see this. And we've seen this multiple times happen. And again, when we understand that this is a tactic that's being implemented by these firms, by these institutions who are only releasing these reports for their own benefit, you understand is that this is obviously indications that they are still shorting and trapped in the AMC play. Another thing, and this is going on earlier to what we said in terms of how Citadel obviously needs to raise money, you can see another thing. Introducing liabilities absorbed by crypto starring BlackRock, UBS, and Citadel. Over 6 billion in equity liabilities stuffed into bullish, with crypto offsetting these liabilities. So despite the fact we've talked about and we've seen how crypto can no longer use as collaterals, you're seeing how they're able to find ways to offset these liabilities. Now, this goes back to what we talked about at the start. If they weren't struggling with liquidity, if they truly were making billions of dollars of profit every single year, they're doing extremely well, they wouldn't be trying to do these things with ways of increasing their capital, with increasing ways of offsetting their risk through things that shouldn't be allowed. And again, liabilities absorbed by crypto is essentially saying that the liability is still there, but we'll make it look like it's not. And so that's very different than having no liability. So it just means that the shares are still there. It's the same example we know with AMC. Yes, we don't have the hundreds of billions of FTDs that are out there, but it doesn't mean it doesn't exist. It's still obviously them. They still have to cover. And this is the same situation. Now, furthermore, and this is talking about why shorts are obviously panicking and they're liquidating, we can see breaking, naked short selling corruption may be exposed next month. So we talked about how hedge funds are going to be required to report short positions exceeding threshold in February. And the question that we beg to ask is, how many short positions will be reported by the Feb 14th deadline? And how many FTDs have been sent overseas that FINRA no longer keeps track of? So this is something that we obviously want to know. It's just truly the transparency of the market. And it's about understanding just really how many shares of AMC and GME has been shorted. We're always seeing this skewed data of whether it's the short interest, whether it's the FTDs, and all of these things. And when we have understandings of how they're able to use crypto to locate shares, how they're able to use options to reset FTDs, how they're able to, just not report some stuff, how they're able to find all of these loopholes. These are always things that we've discovered, but we've never gotten the true data of it because they never have to report it. We know that there are hundreds of billions of tokens of AMC out there, but we don't know in terms of how they're backed. What are their ratio? Is it 1 to 1, 1 to 10, 1 to 100, etc., etc. We know that there are hundreds of millions, if not billions, of FTDs out there for AMC not settled, but truly, how many exactly are out there? Who's responsible for these FTDs? We have all these questions that haven't been answered, but we have the the data that indicates that these do exist. And so with the short positions being able to be reported, it obviously would clear up some things. I definitely do believe that they're very likely going to be trying to find some loopholes when it comes to this, like we've seen in the past. They always are trying to find loopholes. And so, this is something that we could be seeing, but it's about just understanding that we are going to be seeing more transparency in the market, that we do want and understand that shorts are worried because we are seeing more and more margin requirements. We are seeing more and more regulations which are showing, what the short positions is. And like we've seen and like we talked about, whilst people have their concerns and doubts about Donald Trump being president, one thing that is certain is that Donald Trump's company was obviously a victim of naked short selling. And so if he does have an agenda to obviously make it right, then we could be seeing some more limitations on the short sellers. Anyway, guys, thanks for watching this video. I'll catch you guys next time.